Welcome back to Casual Cash, where I share all of the details down to the cents of my financial journey towards building wealth and reaching financial freedom through investing. As you know, I don't usually sell any investments and prefer to hold them for the rest of my life, taking advantage of compounding growth and to take out my profits through the companies I invest in, paying dividends. But in today's video, I have the rare occasion where I am in fact going to be selling one of my investments, and because I share every part of my journey, I'm going to share with you which company I'm going to be selling and tell you exactly what I look at before selling a share and why I chose to sell this one. But that's not all, because at the same time, live and in real time on this video, I'll be using those funds to invest in 4 additional stocks, and 3 of which are my absolute favorite dividend paying stocks right now and going into 2025, with one of them paying a crazy double figure 11% in dividends, and how in one set of transactions I'm growing my passive income and my wealth. So let's get started. So first I need to start off by telling you what the goal of my portfolio is, because for everyone investing is different and we all have different things we want to achieve, so there is no one size fits all. For me, I have 2 goals in my investing. The first is to grow my wealth, which to me means I want my net worth to be as high as possible, and the main reason for that is to build what Jamie Dimon from JP Morgan calls a financial fortress, which essentially means the more you have in your cash and investments, the more it can protect you from what life may throw at you. So you know that if you come across hard times or health issues, or you or your family have any needs to live a comfortable and protected life, then you have the funds to make sure that you can take the hits that life sometimes dishes out. So that is one side. And the other side is the more fun side, which for me is either better choice in life or financial freedom, because the more sustainable passive income you generate for yourself, the more options open up for you in life. You can send your kids to the private school, you can choose that nicer car, or your holiday can be overseas instead of local, and this is for anything that you value in life. It could be a bigger car or less stress about bills, and this goes all the way up to financial freedom when your passive income meets your bills and you don't have to worry about money. To an extent. And now that I've let you in on my goals and what's important to me, let's dive straight in so I can show you the stock that I will be selling and why I chose to sell it, and then the exciting bit about what 4 stocks I'm investing in, including one with 11% dividends. But also, we've got some big news, or should I say mega news. Our sponsor of this video, XM, is giving away $100,000 in cash prizes, and you could win your share. 100 top traders, 100 lucky draw winners, 200 chances to win. I'm not missing out on this, are you? Well, here are the details. By clicking on the link in the description, you are able to 1. Compete from December 19th to January 2nd. 2. Win by skill, be one of the top 100 traders. 3. Or win by luck, be one of 100 lucky draw winners. Best of all, it's totally free to join, no entry fee. Don't miss your chance to win big. Use the referral link in my bio to get started. XM is an award-winning, multi-regulated broker trusted by over 15 million traders worldwide. They offer a superior trading environment that puts traders in the best position to profit. Your capital is at risk and T's and C's apply. So the share that I'm selling today is SSE. You might have seen them in my videos before. They are a renewable energy producer in the UK, specializing in things like solar, wind power, and hydropower, among others. Now, I started buying this share in 2022, and since then it has given me a total return of 5.7%, and is currently paying 3.45% in dividends. So overall, honestly, it's an okay return. But after 2 to 3 years of holding, and after looking through a range of analyst articles on their future, I eventually came to the decision that this stock was not meeting the objectives for my goals of either building my wealth or increasing my passive income to the extent I would want. To break it down, after 3 years, the S&P 500 has returned 44% on its share price, and SSE has returned 5.7%. Now analysts are estimating its earnings growth at about 5% a year and revenue growth at 3.1%, and they estimate profit margins in the business will grow from 18.7% now to 19.3% in 3 years. So overall, nothing stellar or crazy at all. Now, SSE as a power producer is investing heavily in infrastructure, and in the next 3 to 5 years, when they reach those construction goals, returns will likely improve. But by then, I honestly think compound growth in other investments would overtake it. From everything I have read, what it comes down to is that electricity is a regulated commodity and affects everyone. So you can't implement huge price increases, and the only way to grow is to serve more people and build more infrastructure, which costs money and time. And lastly, with its dividend at 3.4%, honestly, although it's not bad, it's currently less than I'm making on my cash savings, so it doesn't make sense there either. So, for those reasons, in this rare instance, it's time to sell it. I've been holding SSC in my tax-free account on Trading 212, so I'm going to go in and select SSC and then sell 100% of my shares in the company. Okay, so that is now done. Let's get to the next part of what I'm going to be investing those funds into next to help me reach my financial goals. The first I'm investing into is the S&P 500. This is my main vehicle to build sustainable wealth over the long term. It is low dividends, good compounded growth, and I've made a whole video about the benefits of investing in the S&P 500. Now, I'm investing into the Vanguard S&P 500 in the tax-free portion of my Trading 212 account. But honestly, the platform doesn't matter, and you can find all of these shares I talk about in this video in the USA section of Easy Equities. So wherever you invest, whatever platform you use, it doesn't matter as long as you're investing. So I'm going to go into my platform and head over to the Vanguard S&P 500. I personally invest in the version that pays dividends, even though they're about 1%, and I'm going to make my first investment here. So that part is for my wealth growth, but lately as interest rates start and continue decreasing, I have been making a concerted effort to build up my passive income stocks. A, because I earn better passive income with these stocks I'm about to show you than cash interest, and B, because as time goes on, people around the world will slowly start doing the same, and I anticipate income stocks prices will increase and dividend yields compared to the price you pay for the stock will go down. So the next three are currently my favorite dividend paying stocks right now and into the future, and they all pay me monthly like a second income. Starting with the lowest dividends, I'm going to be investing into Realty Income. You know Realty Income, you've heard me talk about it before. I've been building up this stock in the last year because it's probably the most reliable stock I've seen to grow a monthly passive income that grows every year, as well as to build your wealth as the share price grows with it over the long term. And just zooming out on its share price graph shows you this. So that's why whenever the price dips, like it did recently, I always try to top up this share. So I'm buying about $254 of Realty Income, and it pays around 5.6% in dividends a year, and it pays your dividends monthly. The next stock I bought was EPR Properties. Now, this is similar to Realty Income in that it's a real estate investment trust that focuses on experienced properties like theme parks and a whole lot more. I've also done a video on this one. I've been really liking property stocks this year because usually as interest rates go down, their debt payments go down and profitability improves. So I've been buying a lot of property stocks this year, and in particular EPR Properties, which is currently trading at 60% below its value according to Simply Wall Street. So there is potential for wealth growth, but it is also paying out dividends at 7.6%, which is awesome. And again, this one pays dividends monthly. So another stock that can grow both my wealth and passive income over the long term. So here I invested another $254 into EPR. And the last stock that I'm investing in paying the highest dividends is the famous QYLD, or the Global X NASDAQ 100 Covered Call ETF. Remember, I invested in the S&P 500 mostly for wealth. The next two were for a bit of both. Well, this one is mostly just for your passive income. This ETF is anchored by shares in the Nasdaq 100, but Global X also does covered call writing, which simply is to write options and take a profit. It's complex, but this video on the channel goes into more detail. But simply it allows the ETF to make higher income and pass on those profits to its shareholders, because this ETF pays a whopping 11.5% dividend, double digits, and it pays you monthly, so you're making almost 1% a month on your investments. The share price has also been growing the last few years, but it's less about that and more about the income. So I'm going to go in and buy another $254 in QYLD as well. Now you may be wondering how much I currently make on these stocks, and the answer is between these three dividend stocks, I make $279 a year, or about $24 a month. And guys, there you have it, the reasons why I sold SSC and the 4 stocks that I have been investing in lately to replace it, along with my 3 favorite dividend stocks that I'm buying into right now. Please like the video if you enjoyed it, and subscribe to the channel to see more of my journey to building wealth and financial freedom. I've got some cool videos coming up in December, but until then, I'll see you guys next time, as always, on Casual Cash. Cheers.